Let's welcome on board Dipan Mehta as well and find out what he's making of the market right now. Dipan, hi, afternoon. I know the strategy has been to do nothing, and that's what really works in the market in the long haul. But how do you capture in these fresh all-time highs? And of course, the rapid sector rotation that's at play.
Yeah, good afternoon, and thank you for having me on your show. I think that it's great that there is sector rotation because eventually that will benefit all the investors because some of the other stock in their portfolio does well and the overall portfolio returns are equal to or higher than the benchmarks. And that in itself, gives comfort that even if you do nothing, your portfolio is working for you. And whenever there's an opportunity, one could deploy some cash. But look, these markets clearly, I think, are on overheated side. Good quality businesses are extremely expensive. I know this situation can last for many more months ahead as well, but I'm very skeptical of deploying fresh money at these levels. Do keep in mind that a lot of liquidity has been sucked up and these counters are pretty much dry. So even small amount of buying can lift the stock prices. But on a valuation basis, I'm not sure whether it's worth buying BSE at this point of time. Our preference is for MCX for the time being, where there is scope to increase the options volume, and there are certain regulatory changes which can benefit MCX once they allow the margins to be freely transferable between the equity and the commodity exchanges. So that could be an upside. And technology cost for MCX will come down or rather have come down now that they have shifted to the TCS trading platform. But ultimately, I think, from a exposure to the exchange industry perspective, NSE has to be the top pick. But look, let's wait for the IPO. Let us see how it plays out, and then we can look at it.
Okay, that's the take coming in on what the exchange stocks are up to in anticipation, of course, of the NSE IPO. We're going to take a very quick break, a little bit of a dip, 73 points lower on the index, continue tracking markets on the other side. Still a little bit soft, about 59 points lower for the Nifty futures and now 91 points actually. TCS is now down over 4%, TechM down about almost 4% there, HCL Technologies down 3.6%, Infi, Wipro. The top 5 losers are all from within the large cap IT space. Adara Consumer, Tata Steel, Asian Paints, DRL, ONGC, Sun Pharma, they're also unable to really withstand the green. Although ICICI Bank still holding on to its gains, as is the case with the Shriram as well as Bajaj Finance too. Dipan, just wanted your sense, a lot of chatter around the passenger vehicle slowdown. Do you really think the festive season, which has begun now officially, at least here in Maharashtra, one could really see a revival? Or would you see, you're really been a sort of, wait and watch mode?
No, I think that you should brace yourself for a few soft quarters in the auto industry. And I think if you're a trader or if you just bought into these companies, then maybe you should book profits over there. Long-term investors who are sitting on profits and these companies, mind you, have given very good returns till now. They may remain invested because it's easier to absorb a correction if your cost price is low. So from that point of view, I think each one has to design their own strategy for the auto industry. But there's no denying the fact that you should expect further correction in auto shares. And the upcoming festival season will be good, but they are battling with a very high base effect. And there is some amount of softness in the overall demand. Some of the drivers which were very strong, like pent-up demand and large order book position for new models, those more or less seem to have got completely discounted. So I would say that again, wait and watch. Don't make any fresh investments. If you're a long-term investor, 3 to 5 year type of a view, then remain invested, assuming your cost is low. But if you just bought recently, I think it's better to just book a small loss or a small profit and just exit these counters.
Point taken. So that's the latest coming in as far as some of these segments are concerned. But Shivangi Sarda also joining us on the show right now. Shivangi, hi, good to be speaking with you. Wanted your take regarding the chemical basket, fairly active today, whether it's in Alkyla Mines, Balaji Mines, Fine Organic, Deepak Fertilizers, they're all active in the trading session. What within chemicals would you bet on?
So very good afternoon. Thank you for having me. So from this entire space, Deepak Fertilizer is one pack which is looking quite positive, and we've seen that there has been a good comeback here. Negation on the daily frame exactly took support at its 50 daily exponential moving average, and on the monthly basis, the stock is still holding on to the higher levels and forming higher bottoms from the last 4 to 5 months. Weekly, it's now started moving after a halt, which is now giving a good risk reward at these levels as well. So definitely, this is one stock which is on radar from this entire basket. But of course, chemical baskets tend to move with a volatile manner. So recommending this trade with a strict stop loss. The next target that we're seeing is 1060 over here with a stop of 998.
The take on fertilizer pack, fairly volatile, so be very cognizant of those moves there. But Dipan, correct me if I'm wrong, but today the stock market's moves are a bit counterintuitive to the kind of rate cut decision that we are anticipating. And I say that because theoretically a rate cut cycle is perhaps positive for IT. A, of course, the spend goes up. Secondly, the growth valuations in terms of the DCF and SOTP go up. While it's not that great for banks because the NIMs, etc., will come under pressure. Today it's a very counterintuitive move, isn't it?
You're right, but I think there's something deeper happening in software. This kind of a correction of 4% in TCS is massive. Maybe we are seeing a lot of FI selling taking place within this space, and I'm not sure. Something seems to have gone wrong over there. Need to dig a bit deeper because on one
Going to get back to Dipan in just a short while from now. It's important to mark that, it's not just us alone in this weakness. Look at how Europe as well is panning out. We're a little soft for the DAX right now, 0.5% lower for the FTSE. It's, of course, UK inflation data, which is weighing heavy on the markets. Mildly soft even for the CAC right now, the FTSE MIB, Stock 600, all in the red as we speak. The important one, of course, is the US futures, absolutely flat right now. Wall Street is just anticipating the long-awaited Fed rate cut, and now the question is, or rather the bigger question is about the quantum of it, at 25 bips, pretty much priced in, par for the course. Of 50 bips definitely is going to, sound off alarm bells in terms of red flags for the economy. Perhaps shouldn't be the case though, because the data points have been quite okay. But absolutely flat throughout for the S&P, the Dow, as well as the Nasdaq futures as we speak right now. Can we take it back to Dipan? Okay, we will connect with him in just a short while from now. But Kunal, out of the global charts, which ones are you looking at, and what's the hint that you're getting about how much the Fed rate quantum could be, and whether it's going to be something that's going to disappoint the market, which is higher than 25 bips?
So I think so far we are seeing that many of the global markets have started to get into a recovery. Now we saw Dow Jones from 41,500 approximately coming back to sub 40,000 mark, then making a dash back again to that 41,000 plus levels. S&P is very close to that 6,000 mark. So when we are seeing this global phenomena, what we are seeing is that there was a round of volatility which came back into the month of September for many of the indices. That's been absorbed, and now we are looking at these indices coming back into either a fresh high breakout for themselves, or at least some stronger recovery. What we have also seen is going into the internals of the US market specifically, that the Russell 2000 over there has come back into a V-shaped recovery in the last 2-3 weeks, and that's a very different kind of a recovery which we've seen for the US markets. That generally is an indication that maybe the the overall market breadth over there has started to improve significantly. Coming to the other markets, you've seen European markets also going through a corrective phase from their August highs. There was a point where DAX, CAC, FTSE, I think major indices, they corrected by a margin of 5% to 7% broadly. These indices were a bit late to recover, but then nevertheless we've seen at least a 50% plus kind of a recovery from the fall which these indices had gone through. Same is the case with the likes of Nikkei, etc. Many of these indices have just about gone through a recovery and stabilized for themselves. So I think except for India, which has been an outperformer, many of the other global indices are just going through a process of correction and then a recovery and then again back towards stability.
Okay, important flashes at the bottom of your screen wherein the talk about one nation and one election is something which is underway. What we understand from sources and PTI is the fact that the report, the Govind Patel report, was tabled today in front of the cabinet. Of course, the decision is something that we'll have to get the clarification and confirmation on. Remember, as far as the political agendas and the political, political actions is concerned, this is an important one. This is what the NDA or the BJP government was backing for a long time. They were backing the one nation, one election phenomenon, which basically in simpler words means that the central and the state election will happen simultaneously, if not at the same time, at least over the same course of period, so that the election uncertainty or the political uncertainty just goes away at one go. And of course, it's easier to manage with respect to the resources, etc. as well, which is deployed for this purpose. Was debated very strongly for a long period of time. Let's see what the cabinet decision is today. But Aisha, clearly this is going to be a big one as far as the political agenda and the political ramifications of the same is concerned.
Absolutely. And, in a step towards the simultaneous polls, the cabinet has already cleared it. So let's see what the final course is. It seems like, like Anisha was pointing out, it's been in the works for a while now, and it seems like it could very well take shape soon. But that said, for the market, of course, the big one is the Fed meet tonight and what the outcome is going to be, of course, which we'll react to come tomorrow morning. Right now, we are under pressure, lying in sync with what at least the European counterparts are up to. Kunal, other than IT weakness today, is there any other indicator that tells you that there could be some more weakness in store?
For the IT index?
For the overall market?
No, it doesn't look like.
Sectorally, is there any other indication?
It doesn't look like, Aisha, because I did a market breadth analysis looking at the number of stocks in the Nifty 50 space, the mid cap end and the small cap end, and the ones which are trading above their 20-day moving averages, 50-day moving averages, as well as 200-day moving averages. That's a classical sign that whether the market breadth is overbought or not. And the data is quite interesting because it just indicates that only 57% to 65% approximately number of stocks or weightage of stocks from the mid cap 50 as well as the small cap indices are trading above their short-term moving averages, which means that even if the indices have moved up higher, it's on the basis of large cap names, heavyweight sectors which have moved up higher rather than the frothy names of the mid cap and the small cap end which have actually moved up higher. And I think that's I would say a positive sign for the markets, because there's not too much of a froth building up. Yes, there could be few pocket of stocks here and there where there could be frothiness, but then I think as an overall market, we are still at a zone where the index move is largely based on large cap names. So I think that itself is an indication that there may not be an incremental or a sudden weakness which could creep into the the indices as such, unless there is a significant global data point which maybe comes across and then tries to just about hamper the rally across the globe as well as for our markets.
If you like this video, then like, share and subscribe to ET Now.